Hello traders and investors, this is a Bitcoin technical analysis video. The first issue I will tackle in this video is the question of, is a 100k Bitcoin still possible, yes or no? To be precise, not if it's possible, because everything is possible in life. Is it likely? To understand if a 100k Bitcoin is likely, we need to understand where Bitcoin is in its current cycle. Okay, and I'm referring to the bull cycle that began on November 7th or November the 14th. And this cycle hasn't ended yet. We had a first wave from November until April of 2023. We had a correction until August of 2023. We had the third wave, the most bullish wave, which ended on March 13th probably. Okay, this is the weekly chart, so forgive me. And currently we are in a correction, and I still consider this correction to be a wave 4 correction. Why is it a wave 4 correction? Because it is complex and prolonged. And usually when wave 1 is a simple zigzag, an ABC, let me show you. A, B, C, and the flat one at that, then the fourth wave is prolonged. The question is, where do we draw the line? Because technically speaking, this correction can last up to 3 times more than the third wave and still be considered a fourth wave, and it could go down lower than the 0.5 retracement of wave 3. Let me show you. Okay, it could go down lower than the 0.5 to the 0.618 and even lower, and still technically be considered a fourth wave. But you have to draw the line somewhere, okay? Because at a given point it becomes unlikely, and you don't want to be one of these traders or investors that is left holding the bag, waiting for a bullish impulse that doesn't come. And unfortunately, many people are in denial, not me. I called this correction, and I called 45k in July, okay? So regardless, we need to keep an open mind, and we need to see if a continuation to the upside in wave 4 is likely. Where do I draw the line? I draw the line at the 0.618 retracement of wave 3, meaning that if the price closes a weekly candle below 43.5, then I will consider it a failed cycle, and I'm expecting a lot lower prices to come, okay? So write it down, the 0.618 at 43.5 is where I draw the line. Can it go lower and then go back up? Yes, but a continuation in wave 5 will no longer be likely, in my opinion. As far as the time is concerned, I think that the one-to-one extension, meaning the same number of days, let me show you again. Okay, in wave 3 we had 30 bars, 210 days. So I think that the same amount of time for wave 4, the one-to-one extension, is reasonable, even if it will be slightly longer into December of 2024. It's still reasonable for wave 4. However, beyond the one-to-one extension, it will become extremely unlikely, in my opinion, okay? So we have the price limit as 43.5, and we have the date limit as October 7th, 2024, okay? Beyond 43.5, meaning lower prices, or beyond October 7th, I will no longer entertain the bullish option, because I will consider it extremely unlikely. Okay, now what kind of a correction we have here? Currently we have a double zigzag with 49k as the lowest price. Now, if we assume that the correction is over, I don't think so. I think we still have one more low to go, at least one more low to go. But if we assume that 49K is the low, or let's be real, let's assume 43K, 43.5K is the low, then we need to take that figure and try to calculate the length of wave 1. There are a few, wave 5, excuse me. There are a few ways to do it, okay? We can do it by using a fib retracement tool. From the top of wave 3 to the bottom of wave 4, let's assume 45K, okay? And there is a relationship between wave 4 and wave 5. Wave 5 can extend as high as the 1.272, meaning 27% higher than wave 4. And this brings us to 82K, okay? So 82K, assuming that we make it to 45, is a realistic target. If 49K is the lowest, okay, if this was the end of the correction, then the target pretty much remains the same. It doesn't make a lot of difference, even a bit less. Okay, another way to measure wave 5 is to use the parity between wave 5 and wave 1, because wave 5 and wave 1 are usually the same length, and if that is the case, then no joy, because the top it could go is to 65K, okay? So no 100K Bitcoin for you. Another way to measure wave 5 is by using the 0.618 extension between the 1-to-1 and the 0.618. It's a very generous measure. And if we use this generous measure and 49K as the low, then a 100K Bitcoin is still possible. Let's check by inputting into the coordinates 45K. And if 45K will be the end of the wave 4 correction, then our target is between 81K and 103K, okay? So if the market will turn ultra bullish in wave 5, there is still a theoretical chance of a 100K Bitcoin, assuming that the market will pick up. And the market has to pick up, and it has to pick up already, okay? It's past time. However, beyond October 7th and below 43.5, I will no longer support the notion of a wave 4. Now, let's go over the immediate price action. First of all, big picture. Are we in a double or a triple zigzag? What is a zigzag? A zigzag is an ABC correction. We had one ABC and a connecting X wave, second ABC, and this could be wave 1, or this could be a connecting X wave, because the connecting X wave can be three waves or 5 waves. Currently, I am assuming that it is an X wave and that we are still going to experience more downside, and let me explain why. If this was really the beginning of the 5th wave, then we should have seen price action, a lot more bullish price action. Okay, it started out very nicely, okay? Let me show you, okay. Wave 1, extreme move to the upside. Wave 2, shallow pullback. But this is where we begin to encounter difficulties, because if this is the wave 3, it's very short, a very, very short wave 3. And theoretically, we could still get a wave 5, but wave 5 cannot be longer than the third wave cannot be the shortest. So even if this is a wave 5, which I highly doubt, we are looking at 65K and then a correction. Okay, so the chances of an upside are not very good. Also, look at the overlap between the price. The price is consolidating in a very narrow range with 58K, which was support. Now it turned into resistance. And whenever you see prices overlap, when you see these candles overlap, you should understand that it signifies a correction. It doesn't signify bullish price movement. It doesn't signify a trend, not an uptrend and not a downtrend. So what am I expecting in the coming weeks? Possibly into late September, early October. I'm assuming that this is an ABC, which constitutes an X wave, and I am looking for a broader, a larger ABC to the downside. And this ABC will probably take Bitcoin to as low as 45K and maybe even lower. Okay, we need to see when the wave A ends, then I will have better ability to predict. Now, what about trading setups for the coming weeks? First, you need to be very discerning with your setups, because the market is just chopping around in low volatility and it's not doing anything. So it's not the kind of environment that I am trading, because I'm not interested in trading micro moves. Okay, so what I am looking for is, I am looking for Bitcoin to enter this demand zone with the proximal line at 56K and the distal line at 54K. When it does, I am expecting a reaction, not an overwhelming reaction to the upside. I am expecting something similar to this daily candle, meaning that I'm expecting the price to go as high as 62K, and it will form a head and shoulders pattern. And this will be a good opportunity for you to learn the idea behind a head and shoulders. A head and shoulders is nothing but two A, B, C corrective waves, okay? Because this is the A, B, C, and now we have the head. The second B wave creates the shoulder. This is why it is usually shorter than the left shoulder. And in the C wave, we see a trend, we see a strong reaction to the downside. And this is what I am expecting. And it will take time because it's going to be complex. It's not as simple as I've drawn it. It is, in reality, it is an ABC, another ABC, and the third C wave, which could be an ABC as well, meaning we are still looking at a lot of chop, a lot of low volatility, and probably a very slow bleed to the downside. So you need to be very discerning with what trades you take. I will take a trade if Bitcoin will enter this demand zone, and I will exit the trade at 62K, more or less, maybe a bit higher, maybe a bit lower, because we can have surprises. We are essentially in what is a bear market. And then I'm going to load up on the shorts if they come, because I expect continuation lower to as low as 45K. Now, if somehow the price will surprise me and we will make a fifth wave to the upside, then I'm expecting the price to go not higher than 65K or 66K. And this is where I will load up as well, because in that case it will be a second wave correction, and this correction could go deep, very deep, as low as 52K or maybe even lower, okay? So currently there are no trades. Look for a trade between, a long trade between 54 and 56, maybe a bit slightly above 56, or look for shorts above 62K, maybe 63K. look for shorts, it may be your last opportunity to load up, because if we are looking at something more bearish, if we are looking at a cycle breakdown, then it could get really ugly and really fast. But I don't want to talk about it yet, because the bullish opportunity or the bullish scenario is still alive. If this cycle will fail, if we go below 43K, then yes, I will discuss the more bearish option, but it really is a doomsday scenario that I don't want to contemplate. I prefer to be wrong on this one. That's all I have for you on Bitcoin. I hope it helps, and I will see you in the next video.